Welcome back. This afternoon you're listening to the Todd Laborowitz Show, Real Estate Radio on Salem Broadcast Network, WRC 1260 AM. I am your host, Todd Laborowitz, and we are speaking now with Jim Musgrave from Research Financial Strategies, and he's going to give you his word on wealth.
All right, Todd. Well, listen, we had a lot of economic data released this week. And, you know, when you're managing money, you have to look at both the fundamentals and as well as the technicals. Again, the fundamentals tell us what to buy and sell, and the technicals will tell us when to buy and sell. So today I'm going to focus on the fundamentals because there's a lot of economic data that came out just this week. And so, again, over the last year or two, really the Federal Reserve has really been driving the market. They're basically keeping the rates low, but they're going to continue to reduce their bond buying by $10 billion a month. And so, again, the economy is still fragile. Long term, they see the economy growing a little bit better, but in short term, the economy is still fragile, and so they can't raise the actual interest rates in the short term. So, in terms of the numbers, the economy in the first quarter. It could be partially weather-related, but in a macro context, this has been a very, very slow recovery, and we really aren't seeing the growth that we've seen in post-recession recoveries. But with that being said, the Dow Jones Industrial Average broke its all-time high on Wednesday, and so again, the market continues to be strong, even though the actual economy is still kind of limping along. But here are the numbers. So if you look at fourth quarter 2013, the gross domestic product, or GDP, was at 2.6%. But if you look at the first quarter that we just got through, GDP was 0.1%. So it was basically flat. The next release for the GDP numbers is going to be May the 29th, and so we will certainly be looking at that. In terms of the industry, again, if you look at real GDP, the increase was, again, 2.6% for the fourth quarter. And overall, 15 out of 22 industry groups contribute to the economic growth. And so, again, overall, when you break down the economy in different sectors, the majority of them are doing okay. And the ones that were sort of the leading contributing groups were the non-durable goods of manufacturing, different professional, scientific and technical services, as well as wholesale and trade. Personal savings has been pretty consistent. It's about 4.3%. And but there is some I guess short-term economic things that are looking pretty good. One of the things that we look at are light vehicle sales. And when you look at light vehicle sales, the average is really about 4.4 million. So in March of 2014, just a couple of months ago, light vehicle sales were at 16.3 million. So that tells us that the consumers are starting to buy more vehicles, which is a very positive sign. Okay. Also, chain store sales are also increasing sales as well. So that's a good thing. And another short-term economic indicator that we look at is the railroad traffic. Again, I guess I'm not sure if they do it by volume or number of cars, but the actual railroad traffic has also been improving as well in recent months. So that is a good sign. Kind of getting back to what we talk about in terms of the real estate, the federal funds rate has stayed the same, but what they're predicting is that the Fed's not going to raise rates until probably 2015 at the earliest. And really what that means is that when you're looking at interest rates increasing, that's going to be more expensive to buy a house. And so maybe that's one of the reasons why we've seen sort of a low inventory of houses on the market is people don't want to get rid of their low mortgage rate. So that's something to look at. So kind of putting all this stuff together is that, again, we looked at the fundamentals. Things are kind of creeping along, but we are nowhere near a recession. And I would still, you still want to have exposure to equities and stocks. That's going to be your number one asset class at this point. And so, again, just kind of stay the course. We are expecting hopefully the next couple quarters, number 2 and 3, to improve a bit as the weather gets a little better. So, again, if you have any questions or want me to email or send you this information, again, you can visit my website, jimmusgrave.com, or call me at 301-588-0514. I'd be happy to get you any information that you like. So, Todd, that's all I got today on the Word on Wealth. All right.
All right, Jim, I really appreciate you being here, and thanks for giving us the Word on Wealth. That's Jim Musgrave with Research Financial Strategies.
Investors endured 2 devastating bear market corrections since the year 2000. Unfortunately, many people still haven't recovered from their losses. Yet our clients tell a different story. I'm Jim Musgrave with Research Financial Strategies. For investments that make money in both bull and bear markets, call me at 301-588-0514 or visit jimmusgrave.com to learn how Research Financial Strategies can benefit you, your family, and your business. Can you afford not to?